But you have to be patient with Forex, as you know, I want to show y'all some newer examples. Price goes all the way from, just take profit 3 right here. Obviously it's take profit 3. Our psychological level, take profit 3 level, 1825. Next psychological level is 1824 at 1830, 1825, take profit 3. Price goes all the way down to take profit 3, and you could have got in right here with this yellow candlestick. We see what a bullish engulfing pattern. Pay attention to candlestick patterns. Boom. On the 15, you see this bullish engulfing pattern right here. Bullish engulfing pattern, yellow candlestick engulfing this black candlestick. On the left, we see this yellow candlestick overpowering this black candlestick, letting us know that buyers are in complete control from take profit 3, and it goes all the way up to take profit 5. Now this is a great trade if you want to get in at the bottom. This is where you make the most money, from 1825 all the way up to 1842, depending on your lot size. It's easily been 2 grand, 3 grand, 4 grand, 5 grand. But you getting late, you getting for an entry instead of just waiting and being patient and waiting a day or two before, and you have got back in the overall direction and rolled this all the way back up to take profit 7. You get in at trade 1 for a buy at the top of an uptrend where you lose the most money at. And you would have been in profit from 1838 to 1841, but you didn't see that you were supposed to get in at this bottom at Great Trade 1. This is where you make the most money at. This is where you lose the most money at. And price goes all the way up to 1842 and rejects off of 1842 and heads all the way back down from 1842 all the way back down to 1831. And from 1838 to 1831, it gets you out this trade and you lose your money because you up the lot size. You enter for a trade. It's okay to enter for a trade at the bottom, and you can increase the lot size because you're at the bottom and you're in profit this whole time from 1825 all the way to 1841. You're in profit this whole time. So depending on your lot size, easily 10 grand, 20 grand, couple thousand, but you get in at for a trade 1 for a buy at the top, at 1838, and you're in profit all the way to 1841, and depending on your lot size, could have easily been a couple thousand, a couple hundred easily, but you're trying to swing trade this, and this is in the trade, the swing trade. This trade didn't happen from February the 10th to February 11th. This didn't happen until, from February 11th all the way back to February 11th, like 2 days. This trade didn't happen. Then you could have gotten for a buy, once price broke this trend line, you could have gotten for a buy. Price breaks this trend line, boom, we're looking for buys. And we'll explain that, in a second as well. But you're getting for a buy at trade 1 for a buy. At 1838, and price goes to 1842, and you're trying to swing trade this, and this is in the trade, the swing trade, and you up the lot size, and you feel good about this trade because you're in profit, and then price starts to head back down. You don't understand this is a candlestick pattern. At the top of an uptrend, you'll see some type of candlestick pattern, letting us know that price is heading back down. Where we see a black candlestick over this yellow candlestick engulfing. This is a bearish engulfing pattern. Black candlestick on the right is engulfing the yellow candlestick on the left, and then when we see what black candlestick push price back down, and you're feeling good, and you don't understand. You say, oh, you see price heading back down. You're thinking price is making a higher low, and price is making a lower low. It gave us this bearish engulfing pattern. At the top of an uptrend, you'll see some type of reversal pattern that is no price is going back up. It's like at the bottom of a uptrend, you'll see some type of reversal pattern. You'll see at the top of an uptrend, you'll see some type of reversal pattern that is no price is heading back down. We see a bearish engulfing pattern, and at the bottom of this, like at the bottom, you'll see some type of candlestick pattern. We see this bullish engulfing pattern, yellow candlestick engulfing the black candlestick, just like we see this bearish engulfing pattern, black candlestick engulfing the yellow candlestick, meaning black candlesticks sellers are in control over buyers, and we see yellow candlestick at the bottom, or buyers are in control over sellers. If we was in a nice little downtrend from here, from 1835 all the way down to 1825 from take profit 5 all the way down to take profit 3. Price made what? A higher low. Once price makes a higher low, boom, you get in you can get in for a buy. As we know, once price makes a higher low, price will what? Make a higher high all the way up to 1842. We was in an uptrend. Price from take profit 3 made a higher high to take profit 5. Then we see some consolidation before price makes a higher low all the way back down to take profit 3. Once price hits to our psychological level, our take profit 3 area, we see what? A bullish engulfing pattern. Yellow candlestick engulfing this black candlestick. Let us know that price is heading back up, all the way back up. It heads from 1825. We could have got in at the bottoms where you make the most money at and rolled it all the way up to 1840, 1842, 1841. Boom, get out the trade. If we see this bearish engulfing pattern, this lets us know that price is now at the top and at the bottom of at the bottom of an uptrend. You should see some type of candlestick pattern and let us know that we're heading back up. And at the top of an uptrend, you should see some type of candlestick pattern. Let us know that we're heading back down. And price heads back from Great Trade 1 all the way up to 1841. After we see this higher low, see a higher low, boom. See this higher low, boom. And then what do we see? Let's go to this uptrend real fast. Go back to this uptrend. More time. Price makes what? A higher low before making a higher high. Right here, boom. Price makes, this is a higher low. Price makes a higher low. Right back from take profit 5 to take profit 3, it makes a higher low before making what? A higher high all the way back up to take profit 5. And pushing above take profit 5. So you have to pay attention to market structure. As you know, price makes market structure. Makes a higher low, makes a higher high, makes a higher low, and then what? Makes a higher high all the way up to take profit 7. So price was in an uptrend, and it started here, made a higher high, consolidated, made a higher low, made a higher high, back up here, market structure, made a higher low, boom, then what? Consolidated, and then what? Made a higher high all the way up to take profit 7. So we have to pay attention to market structure, trend lines, everything. We have to use candlestick pattern. We have to put it all together again. So I understand, you feel good because you had gotten in for this trade, but you had gotten at the top, and you're in profit from 1838 all the way to 1841, 1842. You're in profit, and depending on your lot size, you could be up a couple hundred, a couple thousand, but when you're in a live trade, emotions start to come up. And you got in at the top of an uptrend where you lose the most money, and you're trying to swing trade this, and you think price is making a higher low, and it's making a lower low, and it makes a lower low, all the way from after making this bearish engulfing pattern. At the top of an uptrend, we'll see some type of candlestick pattern. At our psychological level, take profit 5 area, we'll see some type of candlestick pattern. Now no price is hanging back down. It makes a lower low from 1841 all the way past 1838, all the way down to 1831, 1832, before pushing back up to 1837, and then continuing a lower low all the way down to 1820. We have our trend line, candlesticks are below this trend line. We're in a downtrend. We're making a higher low, or just making a higher low before what? Making a higher high. Market structure, making a higher high. So when price is making a higher low, we want to get out the trade and wait for price to make a higher low all the way down here, and then we had got in for a buy. As you made the most money at the bottom, and you could have rolled this all the way back up to take profit 7. All right, gang. So I hope that helped. In our next video, we'll break this more down. As a lot of factors come in when you're trading, as you can lose your real money in this market. So be mindful of that. And be aware of what where you enter in the market, with lot size you use, and you're trying to use a $2 lot size, $3 lot size at the top of an uptrend where you lose the most money and price shoots past right back down. You don't have this much money to hold from 1838 to 1832. Even if you do, you're in a negative a couple hundred, a couple thousand, depending on your lot size. Price takes you out of this trade, and you're like, oh, Forex is a scam. No, you gotta be mindful where you enter and what lot size you use.